Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about OCEANEERING International INC quarterly report. OCEANEERING International Inc. offers a diverse range of services and products across various industries. Some of its key offerings include remotely operated vehicles, ROVs, for drill support and vessel-based services, subsea hardware installation, construction, pipeline inspection, survey and facilities inspection, maintenance, and repair, distribution and connection systems for the energy industry, autonomous, mobile robotic technology and entertainment systems, subsea installation and intervention products, including riserless light well intervention services, inspection, maintenance, and repair services, diving services, project management and engineering solutions, asset integrity management services, software and analytical solutions for the bulk cargo, maritime industry, software, digital, and connectivity solutions for the energy industry. The company operates in several segments, including subsea robotics, manufactured products, offshore projects group, integrity management and digital solutions, and aerospace and defense technologies. Its products and services cater to industries such as offshore energy, defense, aerospace, manufacturing, and entertainment. OCEANEERING International Inc.'s stock price dropped by 5.55% after the release of its third quarter 2025 earnings report, despite reporting strong financial results that exceeded analyst forecasts. The decline was attributed to investor concerns, as the company's impressive earnings and revenue growth were overshadowed by underlying issues. Specifically, investors may have been worried about the sustainability of OCEANEERING's growth, particularly in light of increasing competition and market pressures. Additionally, the company's reliance on a few large contracts may have raised concerns about its long-term financial stability. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the energy segment, which saw a 1.7% increase to 19.4% YoY, and geographical regions, which increased by 3.2% to 21.6% YoY. The OPG segment also experienced strong performances from its subsea robotics and manufactured products segments. Additionally, the company's demand for energy, deployment of capabilities in integrity management, survey services, and mobile robotics contributed to revenue growth. On the other hand, revenue decline was mainly due to a successful negotiation with one customer, suspension of a contract by a customer in the manufactured products segment, and a 4% revenue decline in the integrity management and digital solutions segment. The subsea robotics segment also experienced flat revenue growth. The company's financial performance is also affected by accounting changes, including the capitalization of cloud-based service contract costs and accruals/revenue adjustments. Other factors such as increased costs to operate the business, future demand and order intake, collectibility of accounts receivable, and foreign currency transaction gains/losses also impact revenue growth or decline. Net income and profit margins show improvement. The company's net income has seen a significant increase in Q3 2025, rising to $71,289 from $41,237 in the same period last year. This upward trend continues for the year-to-date, YTD, 2025, with net income reaching $176,108 compared to $91,369 in YTD 2024. Profit margins have also shown improvement, with gross margin increasing to 20.6% in Q3 2025 from 19.2% in Q3 2024. The year-to-date gross margin has also risen to 20.6% from 17.6%. Operating profit margin has seen a similar increase, rising to 11.6% in Q3 2025 from 10.5% in the same period last year. The reasons behind this improvement are multifaceted. The company's higher risk pool has contributed to increased net income, while total adjustments to net income have decreased significantly. Additionally, interest income has risen due to higher average cash balances earning interest. Non-cash items and accounts receivable have also seen a decrease, further contributing to the increase in net income and profit margins. The company's financial performance indicates a steady increase in its ability to generate cash from operations. The net cash provided by operating activities has grown from $74,837 in 2024 to $97,732 in 2025, demonstrating a significant improvement in the company's operating efficiency and profitability. This positive trend suggests that the company is effectively managing its resources and generating sufficient cash to support its growth and expansion plans. The company's debt level and interest expenses have undergone significant changes. Notably, long-term debt has increased by $4,013 from December 31, 2024 to September 30, 2025. Conversely, interest income has seen a substantial surge of 215% in the 9-month period ended September 30, 2025. Meanwhile, interest expenses have remained relatively flat, decreasing by only $248,000 in the same period. Overall, these changes suggest that the company's financial situation is becoming more favorable, with increased interest income offsetting the rise in long-term debt and minimal decrease in interest expenses. The company's financial summary reveals a mixed performance across its segments and regions. The Offshore Projects Group, OPG, showed inconsistent results, with a significant revenue on one page but a lackluster performance on another. In contrast, subsea robotics and manufacturing demonstrated strong performances, indicating growth in these areas. However, AdTech struggled, posting a substantial loss before income taxes. This underperformance highlights the need for improvement in this segment. Overall, while some segments excelled, others require attention to optimize financial outcomes. Management is optimistic about the company's outlook, citing ongoing global demand for energy as a key driver of growth. They expect their energy business to continue benefiting from this trend, with the subsea robotics segment being a significant contributor to operating income. The manufactured products segment also shows promise, driven by higher revenue and execution of higher margin backlog. The company has adequate liquidity and capital resources to support its operations, growth initiatives, and returns to shareholders. Management is focused on deploying their capabilities in key areas such as integrity management, survey services, and mobile robotics to drive business growth and increase profitability. In terms of strategy, the company aims to balance vessel cost, availability, and capability through a mix of short-term, spot, and long-term charters. This approach will enable them to adapt to changing market conditions while maintaining competitiveness. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has paid dividends to its employees who hold restricted stock, allowing them to receive dividend payments on those shares. Secondly, the company has implemented a share repurchase plan approved in December 2014, indicating its commitment to buying back shares and potentially increasing shareholder value. Concerns about inventory buildup exist, but supply chain disruption is not an issue. The company's financial summary reveals a decrease in inventory levels, indicating potential concerns about inventory buildup. The net inventory decreased from $222,849,000 to $218,146,000, and there was a decline in manufactured products and subsea robotics inventories. Additionally, the company recorded significant write-downs of inventory deemed obsolete, totaling $15 million. These factors suggest that the company may be struggling with excess inventory, which could have implications for future financial performance. However, there is no indication of supply chain disruption issues. That concludes the financial summary for OCEANEERING International INC. Feel free to comment below, and I will be happy to answer them when possible.